Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, September the 19th. The year's 2023. Let's talk trading. Trading stories we tell ourselves with Walmall. These videos are for educational purposes only. Your results may differ from mine and different from Walmall. Walmall, we were talking earlier today. I was saying, we tell ourselves a lot of trading stories. And I don't mean like the fish that got away in the Whopper, but I mean we look at the charts and then we tell our stories about support, resistance, moving average, crossovers, horizontal lines, you name it. It's just all stories.
Yeah, I think you're onto something there. The reality is that you can look at a chart and you can create a story of basically of how you think and why the market moved in a particular way. It moved this way if you're a fundamental guy. It moved this way because this news drop went and happened and it missed by the X percent, and because it missed by X percent, it moved up by Y percent, and and so on and so forth. And we can just make all types of stuff up. Now, that said, here's my 2 cents on it. If you can find a story that actually mimics what's actually going on in the market, then follow it. I don't have a problem following the story if it works and makes me money. But understand what it is. It's a story. And what is a story? It's just literally a narrative of what you have observed in the past, and using the narrative of what you've observed in the past to use that as a potential way to make money in the future. And as every person ever tells you about any type of financial, investment, and we're not investing here, but I think it's applicable here, and that is the past does not indicate what the future is going to bring. However, I think it can give you a pretty good clue, and if we go and put some other things around it, then we can go and make some money. There are folks out there that, like you've already alluded to, that, put everything into support and resistance. Do I think there's something to do with support and resistance? Absolutely. I mean, price gets to a certain level and all of a sudden it stops, and it just doesn't like to get past it for whatever reason, and it bounces off of it, and someday it'll break through it, but right now it's not, whatever that may be. You had mentioned to me earlier that you like the idea now of like on an M30 going back several days and looking at several days of data of M30, and that way you can see, on the chart places where price had trouble in the past. That's sort of a support resistance type of story, and that's all it is a story, but you're able to go and recognize that and maybe use that for your, for your methodology to go and help you out a little bit. And here's the thing though, eventually the story breaks. Eventually the story falls apart, and you just got to recognize that, hey, the story fell apart. Doesn't mean that it's not going to hold up going into the future. It fell apart this time. So what do you do with that? Well, it's the thing that we beat over the head of everybody every single video, that I've ever listened that you've done, and that is simply this: what's your risk management? What's your money management? What are you doing to protect yourself? Because the thing is, if you're going and getting into something and it's right 3 times out of 4, you should be able to make a lot of money. But if you got your risk management upside down and messed up, if you got your money management upside down and messed up, you could wind up actually going 3 for 4, 75% off, not bad, and actually be losing money, and so we need to go and put those other things in place. So here's my summarization of stories. Go ahead, have your stories, look at the market, figure out what you see happening in the market, write a story around it, follow that story, but then go and use the tools that you have to go and protect yourselves and allow yourself to go make money. Risk management, money management, and so on and so forth. That's the most important thing. You had sent me, Fiero, a video, I think it was last week or maybe the week before, about somebody who was on some other channel, and I watched the video, and it's so funny because I'm not into this guy's style of trading or anything. But the one thing I picked up on it was something that I've said before, and I'll say it again right now, and that is simply this, that, you know what, the method means, it's important, but it's not the most important. In fact, it's probably on the lower end of things in terms of importance. The most important thing is, what are you doing to protect your money? What are you doing to protect your capital? What are you doing in your money management world? Because if you don't go and do that, you're done. All it's going to take is one big loss, and you're done.
It's funny you had mentioned about support and resistance, because price just dropped down to that 87 level and then bounced, and it had done that a couple of M30s ago.
Yeah, and in fact, if you go and look on a 5-minute chart, it just becomes so clear that, hey, we get down to the 88, we touch it, we bounce off of it. Did it twice last hour. If you go back several hours ago, it didn't quite get down to the 88, but it got right down to the 90 level, and it did the same thing. It's funny how that happens. So there's a story. So for me, if I was taking a short, I would have had a short. If I'm done for trading for today, but my short would have been at 2400.8, and if I wanted to add in, if I didn't get out, my second add in would have been at 2397. That would be my second entry. But I would probably, looking left and seeing that what had happened there, I would probably put my TP right at 90.5, something like that. Because a lot of times it doesn't get all the way down to where we've seen the bounce before. So why not just go and take the profit a little bit early? And if I had done that, the reality is I could have put up 6.5 pips on one trade, and I could have gone and picked up, 8 pips on another trade. Not a bad shot that all would have happened within a half hour.
Yeah. And what was funny is, you and I, we were talking on the phone earlier when you were trading, and price got up to the 2400, and you kept calling it the 40. But
I know.
I said, you know what? Right now, prices, then it started going up, and I think it broke the 5, and I said it needed to close above the 5 or the 6 or something like that. But then I said, you know what? This sucker's they're gonna go to 25 and then drop it right back down to the 00. And that was, and that was a story, a trading story that I was telling myself, because I'm telling myself that when you look at the chart and you have the sweet spots set up to, I don't know if I have one here, but every 25 pips, it just seems so obvious. Let's see, this one, let me just change this chart real quick. Sweet spots, gold, sub-levels 25, and let's see, sub-level, let's see, main level cover, oh, it doesn't matter. But you can see how price just likes to go between 24 to 25, 20 or the 00 down to the 75, and then from the 75 either to the 50 or up. It just does it over and over and over again. So, and to me,
it's just
yeah, go ahead.
I was just going to say, it's like a train on a track going from station to station. If you want to go create a story, it's an easy story, story to tell. Those are the express stops.
Yeah.
If you're on a subway, like if you're in like a big city like New York or something like that, you get on the A train. You get on at 34th Street, then you get off, and then the next express stop is 42nd. The next express stop is 52nd. The next express stop, is Columbus Circle, and it's like, yeah, I did work in New York, and that's why I know it by heart.
But, it's just funny because it's like these are like quarters. And I mean, it's like, is it going to go to the 50 or is it going to go down to the 25? Is it going to go, if it hits the 25, is it going back to the 50 or to the double low? And it's almost like you could almost just bet, just literally bet like we're gambling. And then you just put your stop at the other line. If you think it's going, and the thing is, if you're right more than you're wrong, then you're going to walk away with a nice profit. And the thing is, you set, and the thing, and the beauty of it is you set it up. So let's just say right now we're at 23.90. So if it got to the double low, what I would most likely do is I would say it's going to go back down to the 75. So I'd say, okay, I'll have a TP of 25 and a stop loss of 25. It's like an even bet. And you're right. If I'm right 3 out of 4 times, I'm going to make money over the long haul.
Right. Now, it may hurt a couple times because the reality is that, like with any other type of now I know that price movement is not probability. It's different than that, but we can look at it that way for simplification reasons. The reality is we could go and lose 3, 4 times, 5 times in a row. But the thing is, do you have your money management in place so that you can go and take that? And if you can go and take that, that's great, because if we're going to win 3 out of 4 and we lose 4 or 5 in a row, well, guess what? That means that we're going to, at some point in time, we'll probably win, 10 in a row and then maybe lose 1, win another 10 in a row and lose 1, and and that's where you can make your big money. And, you take your wins with your losses, or you take your losses with your wins, and but the thing is, you can't take, your losses with your wins if you don't go and protect yourself and have that all in place, and so, it's sort of like there's a story that you can go and tell, and basically the story is that, I see this happening over and over again on the chart, and I'm going to develop a method around it. And the thing is that story is sometimes going to come true, and in fact, most of the time it's going to come true, but sometimes it's not. But the one thing that you're going to have out there, and I don't want to call it a story, I'm going to call it the truth. And the truth is, set up your money management to protect yourselves so that you don't lose more than you can afford to lose. Because that's a law that you can't break. You just can't violate it. And I know I sound like I'm beating a dead horse, but I'm sorry, but that's for me anyway, that was the most important thing for me to learn about trading. Just don't do that. I mean, I've said it on this channel before, I've blown 3, 4 accounts, blew them up, just totally, thousands of dollars out the window for me never ever to see again, and sometimes, in fact, I know for a fact, not sometimes, but at least twice, making the exact same mistakes. Not mistakes in my method, but mistakes of not properly setting up money management and protecting myself from my own story.
Yeah, and there's going to be a lot more stories we can tell. Like I said, in fact, the one chart I have here, I've got the previous H4 wick zones plotted out. Because I say, once again, price doesn't like staying in the wick zone. And so right here, price got up into the upper wick zone, came out at the 24.048 line. So right there, you've taken that short. Would have paid off. In fact, you'd be up 17 pips right now if you stayed in the trade.
Would have been a beautiful little trade.
Yeah. But that's a story I tell myself. And, one of the things about stories is, there's so many stories you can tell yourself, you can really get yourself tied up in knots. And we'll explore that in the next video, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.